It's a pleasure today for me to introduce Steve Cortes. He graduated from Georgetown University, where he was a George Baker Scholar and nominated by the university for the Rhodes Scholarship, and he also played college football there. Currently, Steve lives with his wonderful family. His wife Holly is here in Chicago, where Steve founded and currently runs Veracruz LLC, a trading and consulting firm providing real-time market research to institutions and produces the ETF ladder sector ranking for individual investors. In addition, many of us recognize Steve from CNBC's Fast Money, where he's a commentator. His comedic responses and youthful personality have earned him the nickname El Capitan, if any of you have watched that. Today he's going to be presenting on his new book, which is for sale out front, Against the Herd, 6 Contrarian Investment Strategies You Should Follow. As your wife told me, Steve, you've been presenting this a lot lately, most recently at Chicago booth, so I can promise you we're a more accepting group here, and we're very happy that you come. And Steve will be throwing us a tailgate next fall for all of this business school, so we look forward to that too, Steve. It's going to be a great time. And after the presentation, we're going to do a Q&A session where you can ask Steve whatever you'd like, and he'll answer it to the best of his knowledge. Thanks again for attending. Turn your cell phones off if you can. Again, wait with questions till the end. And this is Steve Cortes.
Thank you. Thank you, Conrad, and thank you, Notre Dame. It's terrific to be here. You know, one thing I did wonder about, I put on the green tie, and then I thought, that might be a little bit cliche. Do all the speakers who come here who wear ties, do they wear a green tie? Yeah, that's fairly conformist, and if anything, that is not the message I'm going to give you as contrarian. So I probably should have worn a USC tie, right, just to be contrarian. But I would not do that, and the reason I wouldn't do that is I'm a huge Notre Dame fan. I'm a Subway alum, grew up at the south side of Chicago. One of the things that amazed me when I went away to college, and I did not go to Notre Dame, much to my mother's dismay. The main reason I didn't is I really wanted to play college football, and I was able to step in and play right away at Georgetown, where I would have never seen the field here. And so I went to Georgetown. But one of the things that shocked me upon arriving there was that I met people who hate Notre Dame. I couldn't believe that. There was no one on the south side of Chicago where I grew up who hated the Irish. So long family history, going back to my father. And by the way, my sister went to Notre Dame, and her daughter, my niece, is currently a senior here. My father is an immigrant to America. He grew up in Colombia in South America, in a very remote part of Colombia in the mountains. He grew up on a ranch, and this was in the 1920s and 30s. So they were truly isolated from most of the world. He ended up coming to the United States for graduate school, and he came to Indiana. He went to Indiana Tech in Fort Wayne. The reason he picked that, he was given a list of potential schools. The only reason he picked it, he said that literally in his tiny town, San Jose, in Colombia, he knew 2 things about the United States of America. He said he knew about Abraham Lincoln, and he knew about Notre Dame. And the reason he knew about Notre Dame is there were Irish Christian brother priests who were missionaries to his hometown, and they were the educators and the priests there, and they spoke often of the glory of Knute Rockne. So I think it's amazing that, and I tell you that not just because I think it's an interesting story, but it's actually relevant to what I'm going to talk to you about tonight. And part of it is what makes America so unique as a country and as an investing opportunity. I think immigration is absolutely at the crux of that, of our singularity as a country, and my father, thankfully, is a terrific example of that, a man who was able to come from the hinterlands of Colombia and end up having his daughter attend that very school that he had heard talked about in almost mythical ways from these Irish Christian brother priests. I will also tell you my firm, I don't say this at most schools, but I think I can tell you at Notre Dame, my firm is Veracruz. And the reason I named it that is in Spanish, I wanted something Spanish sounding, but in Spanish it means the true cross. And so I wanted to give my firm a name that had religious meaning but wasn't too overt, and hence Veracruz. Now, on a less holy note, I will also confess to you that since I was a child, I think this is the first time that I've been on Notre Dame's campus, because I only come on football Saturdays. It's the only time that I don't have a cigar in one hand and a Bloody Mary in the other. So it's fun to come in and see that these classrooms are operating. There are people studying here. It's not just the football Saturday craziness that we Subway alums so enjoy. By the way, I would love to be an actual alum, but I don't think I'm willing to really go back to school. So if anyone can tell Father Jenkins that I would love an honorary degree, I am all ears, and I'll be glad to show up at graduation. Now, the book. I wrote Against the Herd. Well, first let me back up for a second. Those of you who know me from TV, you will know that I have a contrarian mindset, and I'm on the Fast Money halftime report generally. I'm on most days at noon Eastern time. I'm occasionally on the Kudlow report. I'm going to be on this Friday. But on the Fast Money show in particular, if you watch me, you know that I'm often at odds with the rest of the panel, all of whom seem to always agree with each other. So why am I a contrarian? Why? That's one of the reasons that I wrote this book. I was inspired in part to write this book by Kevin Costner. Now, that might seem strange. I don't know Kevin Costner, and to my knowledge, he's never heard of me. But I did see many years ago the movie Dances with Wolves. And it got me thinking about buffalo hunting. I don't know why, and I did some research on it, and I was wondering, how did Native Americans hunt buffalo before the arrival of gunpowder and horses? It must have been incredibly difficult. Well, one of the very brutal but very effective methods that the Native Americans used to hunt buffaloes was known as a buffalo jump, wherein very fast Indians would find a big herd of buffalo near specially designed cliffs, and they would herd the entire group of buffalo into a frenzy and get them to stampede and gallop literally right off the cliff to their deaths at the bottom of the cliff, where they would then be butchered and used. And it made me think human beings often act like those buffalo. Maybe not to our physical deaths, but certainly to harm in other ways, particularly financially. And I believe that we have seen far too many mass financial buffalo jumps over the last 10 years. The most glaring example, of course, being the tech bubble, and the most recent example being the housing crisis. But there have been many mini bubbles, and I think more are forming, and I want to try to convince you to either at least avoid these financial buffalo jumps or to perhaps even profit from them. I think it's important to be willing to think against the herd. I think if I were to ask you, I'm from Chicago, and if I were to ask you, or ask even most Chicagoans, what is the greatest tragedy in Chicago history? Most people would probably answer the Chicago fire. Sports fans might answer the Bartman Ball a few years ago. By the way, Bartman went to Notre Dame, just for the record. In fact, the Chicago fire, while it was certainly the most calamitous property event in Chicago history, because the fire moved very slowly, there was thankfully very little loss of life, and most of that was firefighters. It wasn't civilians. Most people were spared loss of life in the Chicago fire. The worst tragedy in Chicago history you probably never heard of, and it is in fact one of the worst maritime disasters in U.S. history. In 1915, the Western Electric Company, which was in Cicero, Illinois, decided to take its 3,000 employees and family members on a cruise to the Indiana shores, not far from here was the intended destination, to the dunes for a Sunday picnic. All 3,000 boarded the SS Eastland on the Chicago River. There was some sort of disturbance on shore, and the entire group of people herded to the port side of the boat with such weight that they flipped the boat completely over, trapping hundreds of people beneath. In total, 844 men, women, and children died in the SS Eastland disaster in very calm, very shallow waters of the Chicago River. Now, I think there are two key takeaways there from this very dreadful tale. The first is that following the herd, as I mentioned, can be very dangerous. And the second is that danger is often found in the least likely places. For example, I'm going to talk more about China. China is a place that has been growing for 30 years without a recession. How can one lose money in a place with a track record like that? Well, I submit that like the SS Eastland, very real danger does lurk beneath the surface in China. but I think it is apparent only to those who are willing to think independently. I should point out, too, that one of the lessons of the Eastland is when danger is obvious, we tend to take precautions. If you are going onto a ship in raging seas, it's very likely that you're going to wear a life preserver. It's when we let our guard down that often the most dangerous circumstances unfold, and particularly, I might add, when we have been assured by these so-called experts that all is well. I'll give you one example. In July of 2007, Fed Chairman Ben Bernanke was asked about housing, and he said, quote, "Given the fundamental factors in place that should support the demand for housing, we believe the effect of troubles in the subprime sector will be limited." Those words were spoken at S&P 1500 just as the world was about to unravel financially. Following the herd into that morass of housing, and not just subprime, but housing in general, brought untold losses, both financial and emotional, to literally millions of homeowners and investors. So why then write this book? I'd like to convince you there's 6 contrarian themes in the book. I'd love to convince you of all 6 of them, where I think that the mainstream media, the financial press, and Wall Street are wrong in their thinking, and I think leading investors down a dangerous path. But even if I convince you of only a couple or none of the 6, more than anything, I want to convince you to think. It's the one-word motto of Thomas Watson, the man who made IBM into a global behemoth. Do your own homework. You know more than you think, and Wall Street knows much less than you assume. Secondly, I would like to encourage you to be skeptical. Judge the motives of those who are giving you advice. If a broker is giving you advice, is it truly about your long-term financial success, or is it about his or her near-term fees? If you're getting advice about housing, is it what is in the realtor or loan officer's best interest, or is it what is in your best interest? If you're out at Linebackers on Friday night, does that girl really like you, or does she just want you to buy her a drink? I urge you to be skeptical. So I'm going to talk about 3 themes today, and I'm going to give you 3 arguments for each of the 3. So a trinity of trinities. The first is why contrarian. The second one, I believe that the Chinese miracle is a mirage. And the third, and this is very closely related to the second, I think that America's dominance, despite what we hear continually from the media and from Wall Street, and I mean dominance in every way, particularly economics, which is what this book is focused on, that America's dominance is young and it is growing. But first, why contrarian? As I've mentioned, it's because the masses are so often wrong. One anecdote that goes before Kevin Costner that helped form my contrarian way of viewing the world. Many years ago, I was a young man, and it was my first trip to Las Vegas. I was thrilled to be able to bet on a football game. I bet, of course, on the Chicago Bears in the sports book. Bears losing the entire game, at least versus the spread. I don't think they did win the game, but they beat the spread on the game. Anyway, it seemed like I was the only person in the sports book who had the Bears. Everyone else cheering for the other side. Last minute, Bears win or at least cover the spread. I was literally the only person that I saw take a winning ticket, albeit a very small one, but take a winning ticket up to the sports teller. And I mentioned him, I said, gosh, it sure seems like everyone had that one wrong. He said, that's always how it is. And he didn't even look up at me. Crotchety old teller, had an unlit cigar, he's chewing in his mouth. Finally, he looked up at me over his glasses. He said, son, he said, I want you to remember something in life. The masses are asses. And I took it to heart, and I said, you know, a lot of the time, that is true. And it's true financially. If we look back over history, that teller might know no more than he thinks or than we might think. When we look back at the history of financial manias, there's almost too many to really study. Dutch tulip mania is one that certainly gets a lot of attention. Single bulbs of tulips of certain varieties got to be in such demand that at the height of the Dutch tulip mania, those bulbs were worth more than the average house in Amsterdam. The South Sea bubble in the UK. a UK bubble over our American railroads in the West, which did, by the way, end up becoming very profitable enterprises, but not at the outset. That was, I would say, one of the first really dangerous emerging market stories, when the United States at that time was the emerging market. I mentioned some of the history of Chicago. Chicago had real estate bubbles that were literally sometimes only days long, when Chicago was growing at breakneck speed at the end of the 19th century, and properties would double and then come back to the starting point within a week's time. And then more recently, the tech bubble, the surrounding Y2K, and the housing bubble. Why do people get fooled into these bubbles? Why do bubbles form? I believe it is because as human beings, we are evolutionarily wired to seek safety in numbers. And while that made a lot of sense when we were in some jungle or some forest trying to escape from predators, that psyche, that ingrained predilection, is a serious problem when it comes to investing, because often we find not safety in numbers, but danger in numbers. And I believe that this trend has gotten dramatically worse with the onset of social media. Social media can be an incredibly powerful force, and a very powerful force for good. I'm very new to Twitter. I'm a very late adopter in general of technology. I was finally convinced to get on Twitter. I can't believe how much I have learned, and I hope I have helped educate investors on Twitter. I hope I have helped others to learn. But let's also remember, as powerful as Twitter and other social media forces can be for good, they can be just as much for misinformation or for malice. So just as investors learn from one another and can profit from Twitter, it's also used to form flash mobs. I think when you combine social media with globalization of the economy, what we are seeing as a result is an increase in financial bubbles, an increase in their intensity and in their frequency. And so because of that, I think we need to be especially on guard against mass opinion, because mass opinions, even if they are false, can very quickly become conventional wisdom that, in my view, is not very wise at all. I should also add, in the present day, I think another factor that is related, another reason to be particularly contrarian right now, is that government distortions in the economy, and I'm talking now about the United States, where it's not the norm. We don't have a history of this. But government distortions in the economy, I believe, are also creating the tinder that is necessary to inflame further bubbles. What do I mean by that? When the United States federal government already effectively controls automobiles, banking, and is trying to control finance, we do not have true capitalism in the sense of the private allocation of capital. Given that, I think the dangers of bubbles, and I'm also here certainly talking about quantitative easing and what the Fed is doing, I think the dangers of new bubbles and worse bubbles is actually rising apace. And I think the prime example of that, by the way, is the housing crisis. There's a lot of blame to go around in terms of the housing crisis, and very few people were willing to think against the herd. There were, of course, some very notable exceptions. People like John Paulson, who made an absolute fortune. People like Dr. Michael Burry, who was profiled in The Big Short. But for the most part, everyone was willing to go along. And there was really an unholy trinity there involved. And I think most of the blame goes to the government, because the federal government inserted itself into the housing sector with a goal of home ownership, which is certainly a laudable goal, yet the unintended consequences were that millions of people were put into homes that they couldn't afford. But they weren't the only member. As I said, it was a triad. You had greedy banks who were all too willing to profit, knowing that the government ultimately, that the taxpayer, we were going to be the final backstop for risky mortgages. And frankly, I put a lot of the blame on the borrowers themselves. I know that here at Notre Dame, thankfully, a lot of attention is paid to ethics in general, and particularly to business ethics here in the Mendoza School. There was an enormous amount of unethical behavior going on at all levels, from the individual borrower who took on more of a mortgage than they knew they could afford, or at least they should have known, to the banks, to the government. Now, let's get to some present situations. I think the place the herd is gathering right now most dangerously is in China. And again, if you've watched the show, you've heard me talk maybe talk too much about my positions on China. I will say, though, that China last year was an incredibly profitable trade for me. It's had a very good start to 2012, but China was among the worst performing stock markets in the world last year. And I believe we are in the very early innings of a massive unwind on China. And I should mention, in terms of the pervasiveness of this belief, it is almost unchallenged. We're starting to read and hear a little bit more of China's skepticism, but for the most part, from academia, I suspect that within the halls of Mendoza and Notre Dame, you find very few professors. I suspect you find very little publishing going on that is contrary to the idea that emerging markets must be the place for growth in the coming decades. Certainly extends to Wall Street and to corporate America. There's hardly a day on my network, CNBC, where some CEO does not appear on our network and extol their profit potential in China and how hard they are pushing the envelope in China. And then it also extends to Main Street. Gallup poll just last week released a poll. Actually, 2 years ago, or 3 years ago now, they did the exact same poll in 2009. They asked regular Americans, what is the largest economy in the world? 3 years ago, the United States and China were a tie in that poll at 32%. When they did this poll this year, 52% named China as the largest economy in the world. The reality is the United States is by a gigantic margin the largest economy in the world, and on a per capita basis is 10 times as big as China. I think that the greatest risk in China is the folly of central planning. We often fall for the seductive but ultimately unsustainable idea that a mortal or a small group of mortals can successfully command top-down a sophisticated economy. This idea was refuted centuries ago by Adam Smith in The Wealth of Nations. He described the invisible hand of commerce in which millions of self-interested actors align into efficient and innovative channels of commerce, achieving a remarkable harmony. In contrast, he warned against the coercive and paradoxically inefficient tenet of central planning. He recognized that no small group of mortals could possibly pull off this task. And by the way, those who would try are not suited for leadership in the first place. Jim Chanos, who is a hedge fund manager and very noted China critic, said on our program last year, quote, Adam Smith is going to get his revenge in China. Regarding China, we have seen this movie before. It was Japan in the 1980s. I think, unfortunately, we have too short of a memory on this. Japan in the 1980s, its ascendance then was no less assured to the American public than China's is today. And what do the two countries have in common? Central planning. Back then, it was Japan buying Rockefeller Center and Pebble Beach. We saw it in movies, in literature. We were going to be lucky one day if Japan Inc. allowed us to work for them. It seems now almost laughable, right? I suspect that we will think the same about China before long. I'll give you an anecdotal story. I was in New York not too long ago at a dinner at the famous Sparks Steakhouse. There were 6 of us there, several clients, a couple of associates, all bond fund managers, some very significant ones, from the biggest Wall Street brokers, a couple of sovereign wealth funds. And as the steaks and the wine flowed, the talk about China specifically and emerging markets in general was effusive. Of the 6 gentlemen there, I was the only one whose children were not taking Mandarin. Again, we saw this movie in the 1980s when everyone rushed to learn Japanese. I suggested to the table, by the way, I said that given the demographic trends of the United States, it might be more useful to learn Spanish rather than Mandarin, and I was politely dismissed. Another gigantic folly of China is the lack of innovation. And why? Why do they not innovate? I believe the reason is clearly not a lack of Chinese intelligence. It's not a lack of wealth, at least on the Chinese coast. I believe it is a systemic problem. It is a problem of tyranny, really. When you have a command economy, and not just economy, a command country from the top down, think of what the Communist Party of China, what challenges lay in front of it right now. It must maintain this very fierce pace of growth, a task which so far evidence indicates it's failing to do. It must manage the world's largest ever migration of people from the west to the eastern coast. It has to steer all industrial policy. It has to allocate capital, and it must stabilize inflation to placate the impoverished masses of China. And make no mistake, for all the gleaming towers and wealth of the eastern coastal China and Beijing, China is still predominantly an incredibly poor country. 1 billion Chinese live on $6 a day or less. That is a level of poverty which is akin to sub-Saharan Africa. Now, the Chinese middle class, as we would call it middle class, can be counted at about 60 million people. 60 million people is a very consequential country. It's about the size of France, but it is still just 7% of the entire Chinese population. I'll get to demographics in a moment. So, toward the folly of central planning. I believe that in China, the Corleones are meeting Confucius. And what do I mean by that? There's a scene in The Godfather Part 2. Scene in The Godfather Part 2. After a failed assassination attempt on Michael Corleone's life, he consults his lieutenants and asks them about the plausibility of an insider plot against his life. And he says, quote, "All our people's loyalty is based on business. And on that basis, anything is possible." Well, I submit to you that in China, the people's loyalty is also based on business. It is based now on commerce, on money. And when the loyalty is based on money, then the money had better keep flowing. And why do I say that? Because China is not really a country, not in the way that we think of nationhood. It does not share language, religion, ideology. It is rather an amalgam of countries that was forged together, first under the tyranny of Mao, and then under the commercial ethos of Deng Xiaoping. And so, I believe it is a country where the Corleones are meeting Confucius. Which brings up the point, what if they fail to buy the peace? What then happens? I think in the best case scenario, very serious investment write-downs are in the future for China and for the West, who have invested so heavily in China. But I also think that like the Corleones, when you can't buy the peace, at times only force remains. And so I truly believe that the potential for serious unrest in China, and we're already seeing some small inklings of this, but the potential for serious unrest rises apace. As I said, in the best case scenario, China is enduring a case of massive overcapacity. That is, so much of their top-down investing has gone into fixed asset investment that they are going to be forced to recognize the overcapacity by taking losses eventually. Some examples, automobiles. China is now set to, by 2015, China is the largest automobile producer in the world. It is set to have its production, total capacity production of automobiles exceed 115 million within 2 years. The only problem with that is the world is only buying about 60 million cars right now, globally. And how about bridges for those cars? I think that the bridge builders must be very well wired into the Communist Party in Beijing, because China now has built 500,000 bridges. That is more bridges than the United States, even though we have 5 times more rivers. Ghost cities are becoming the norm. Cities built to house as many as 1 million people that sit empty. Ordos is the most striking example, but it is not the only one. And then I have this picture here. This is the new South China Mall. It is in Dongguan. It is the largest mall in the world with over 2,300 stores. It is 99% empty. When it opened, the New York Times gushed, quote, "There is no end in sight. No evidence that China's long boom is likely to suffer anything more than a modest slowdown." Well, I stipulate that instead of no end in sight, there are no people in sight, because the whole stinking boondoggle is empty. Amazingly, many investors and economists expect China to pull the world through this present global slowdown. Given how little, though, the Chinese are spending and how distorted the economy is, I see no chance whatsoever that China can lead a recovery. In fact, I see China as the anchor forcing the next leg lower, given how many U.S. companies and how many U.S. investors and Western investors have fallen for the illusion, the Chinese mirage. I mentioned the lack of innovation. One thing China is not doing is moving up the value-added chain, the way the United States, for instance, did in the late 1800s. Instead, what the Chinese have done is take a seemingly inexhaustible supply of cheap labor and enforce a cut-and-paste mentality, taking the designs and inventions of the West, manufacturing them more cheaply for export back to the West. What they have not done is innovate themselves. And again, I think one of the most serious reasons why is censorship and tyranny from above. I would challenge you, as wealthy as China is now, at least on the Eastern Shore, and the second largest economy in the world, can you think of a truly significant company out of China who's not simply replicating something that's already done in the West? Or can you think of a product invention that was invented in China? I stipulate that they are not innovating and instead sufficient to try to rely on this labor advantage, which I'm going to point out in a moment is already starting to dissipate, and they're also relying on outright theft, stealing the innovations of the West. One example, on a very low level but still on a mass scale, is Zippo lighters. I'm long Philip Morris stock. It's one of my favorite holdings, so if you smoke, please use a Zippo, and please light up whenever you can. But Zippo, there are 12 million Zippos created every year here in the United States, manufactured here. And the guarantee on a Zippo lighter is lights every time or we replace it. Lifetime guarantee, like Craftsman tools. The problem is Zippo has been absolutely inundated in recent years with fake Zippos from China, which the company calls Rippos. The company now estimates that 12 million Rippos, as many as they produce, are now produced in China. And higher up the chain in terms of value, IP protection, intellectual property, China has almost no respect for intellectual property protection. For example, even though it is already the second biggest computer market in the world, it is only the 8th biggest software market in the world. The reason? Because people don't have to actually buy them there, because intellectual property is not protected. Why is intellectual property not protected? Because the Chinese have no self-interest in doing so, because they are not creating serious intellectual property themselves. The day they do, I think we'll start to see some real protections. And listen, I'll be the first to say, I think the United States as a country is over-lawyered. And here in the business school, you probably won't disagree with me on that. But one of the advantages of being a very litigious society is that intellectual property here is fiercely protected. And you know in the United States that if you invent something, you can absolutely profit from it and count on the law to be on your side. You know, I mentioned the censorship. One problem of censorship is that it inflicts a culture of conformity rather than a culture of creativity. So there is no equivalent to the HP garage in China. It is simply not allowed because of the top-down planning. I would also point out, for a country as sophisticated and, again, wealthy, at least in parts, as China is, consider, as one example, Nobel Prizes. The United States has won 333 Nobel Prizes. China has won 2. Both of them were for peace. The first is the Dalai Lama, who was barred from China. The second sits in a Chinese prison as we speak. I mentioned that the Chinese are spending less. I think this is an incredibly significant chart on China. This is the percentage of Chinese GDP that emanates from its consumers. This goes back to 1998 all the way through the present. As you can see, although the downtrend is slight, there still is a downtrend in domestic consumption. This is unheard of in emerging markets. Right now, 34%, and again, the number is descending, 34% of the Chinese economy comes from its consumers. That same number in the United States is over 70%, and even in other BRIC countries, in Brazil, India, it's well north of 50% and climbing. Why is this number not climbing? Why is the supposedly incredible Chinese middle class not showing up as a percentage of China's growth? I believe the main reason is, and the main reason that their savings rate is skyrocketing is demographics. This chart shows China's population problem. When I say China's population problem, you might think too many people. But the opposite is in fact the problem, too few people. Because China's central planning is not just economic and even invades all the way down into family life, the one-child policy is very soon going to inflict significant economic damage to the country of China. On this chart, the line is the growth rate of the population of China, which, as you can see, is already crashing. The bars represent the total population of China, which is just about to crest. I might add here, too, again, something I'll talk about at Notre Dame that I won't at most places, but as a Catholic university, I think it is worth noting how incredibly unethical and immoral this policy is. And I would also note, though, my book is not written for moral analysis or for ethical analysis, but there are economic ramifications to these kinds of policies. And one of the ramifications will be an incredible gender mismatch. The country as a whole has far more men than women because girl babies are aborted at an alarming rate. And on top of that, in the interior Western lands, it is even more exacerbated. Now, this is so unprecedented in history. Normally, I look to history for a guide. We've seen bubbles before. We've seen credit crises before. This is so unprecedented to have this kind of gender mismatch that it's hard for us to project exactly what the future will be. But I can guarantee this, I don't think it's going to be good. The idea of a lot of young men, particularly if I'm at all right about the Chinese economy running into serious headwinds, the idea of a lot of unattached young men is a bad idea, socially and economically. I believe that demographics, and if you read my book, you'll know this. I'm going to talk about this in a moment for the United States. I believe that demographics, when it comes to economics, trumps all else, and that demographics is truly destiny. For example, Japan, which I'm not really talking much about tonight, but Japan is another chapter of my book. I think Japan is in a terminal downward economic spiral that absolutely cannot be saved, and the main reason is demographics. Japan is a country that today sells more adult diapers than baby diapers. That's a shocking truth of Japan. China is en route to that same destination demographically. Now, thankfully, all of the hindrances and impediments that I talk about on China, the United States has the exact opposite attributes, which I believe will allow us to succeed far into the future. The first is innovation. America is the country with the right stuff. I picked that phrase, the right stuff, because it's the title of one of my favorite books by Tom Wolfe about the early days of American space innovation and aviation. Chuck Yeager, cloaked in total secrecy in the California desert, broke the sound barrier. What is less known even than that is that he almost missed his shot at that chance to break the sound barrier because the night before, he went with his fellow aviators to a hard-scrabble saloon called Pancho's Place, where they proceeded to get incredibly drunk and go on a midnight horse ride. He broke his ribs falling off of the horse and almost missed his chance and was replaced as pilot to break the sound barrier. Now that is an American story. But remember that this is the country that broke the sound barrier. This is the country that split the atom. More recently, this is the country that created Google and Apple and Amazon. This is the country that is the leader in biotech and nanotechnology and some other fill-in-the-blank technology that I haven't even heard of yet. I think it's important to note that we have very well maintained our economic might relative to the rest of the world. This chart shows the share of global GDP that belongs to the United States in the blue, the European Union in the green, and Asia in the red. What is striking to me is that America's share of, and this goes back 40 years, what is striking to me is that America's share of global GDP has been amazingly steady at just above 25%. This tells me two things. Number one, that America is the primary driver and benefactor of global growth. Number two, it tells me that China and Asia are eating the lunch of Europe, as that chart depicts. But consider how fiercely China has grown, and I'm the first to admit, growth there has been incredible. Think of how fast it has grown since, for instance, 1990, since the economic reforms were truly unleashed. And then consider that none of that growth has come at the expense of the United States. One reason why it has not come at our expense: demographic growth. I mentioned this earlier. To me, more than anything, if you want to look at one chart or read one page of my book, this is the one. Demographic growth. What America has that no other industrial country has is that we are growing demographically. Our domestic birth rate at 2.1 is right at replacement, and it's the highest in the industrial world. You throw in a whole lot of immigration, and we are going to be growing far into the future. If you look at this graph, the United States is in the green, and this is from 2000 all the way to 2050. I should point out, by the way, you might say, well, can we project to 2050? Unlike financial markets, which can be incredibly hard to predict, demographics you can predict with incredible accuracy. So the United States will have, in the year 2050, 37% more working adults than we have today. Europe has already begun its descent to fewer working adults, and China's is just about to crest. The most productive members of society form the basis for that society's success, and the United States is uniquely positioned. And again, I mentioned immigration, and I mentioned my father earlier coming to the United States, knowing about Notre Dame. I think sometimes we Americans, we're so accustomed to immigration, and we inculcate immigrants so successfully that we forget about just how truly unique we are in the world. For example, China, for all of its growth, has no queue of people lining up to try to immigrate to China. I would also mention China, by the way. I mentioned the survey of Americans getting wrong the world's leading economic power. Recent survey by China Daily of the wealthy in China, 60% of them said they have plans to leave China. And their capital is already leaving China. It's leaving for Australia, for the United States. The Chinese are not buying Chinese shares, as evidenced by the share performance. Could you imagine in, say, 1890 US, as the Industrial Revolution were really just starting to kick up, could you imagine asking wealthy Americans at that time, are you going to stay in America? Of course they were going to stay in America. None of them would have said, no, I think I'm going to England. They would have said, this place is growing. The streets are paved with gold. I'm going to stay in America and invest my money here and stay here. That is not the case in China. But back to immigration. Because I think sometimes we're a little bit too accustomed to it, we forget just how unique we are. I always think of Coming to America, the Neil Diamond song, which I know is a little cheesy, but it makes me tear up every now and then. When I was a kid coming to America, we had fun with immigrants. That was a movie which the students here are probably too young to remember, but it was Eddie Murphy and Arsenio Hall way back in the 1980s. By the way, speaking of the 1980s, my book, if you read it, you'll notice that it is absolutely full of pop culture references from the 1980s. And my editor said to me, holy cow, Steve, he's like, you're really showing your age. The world didn't end in 1990. He said, can you possibly put any references, any pop culture references from after the 1980s? Well, my pop culture world did end, number one. And number two, I told him I thought about it for a moment. I said, you know what? I decided I liked the world a lot better when Ronald Reagan was president and when Lou Holtz was winning national championships at Notre Dame, so I'm going to stick with the 80s. But what those immigrants bring to us is their energy, their innovation, and yes, their reproduction. So from the laborer who is sweating in the produce fields of California to the graduate level engineer at a lab at Notre Dame, these immigrants make sure that the United States will be dominant far into the future, numerically and qualitatively. A few examples I would point out. Last year, half of all patents registered in the United States were registered by foreign-born Americans. And that's because presently, 80% of all graduate-level math students in the United States are international. Last year, the Intel Student Science Search, 7 of the 10 winners were the children of immigrants. The world's talent still comes here. And by the way, one impediment I see to American growth, a policy that in my view could not be more wrong, is our visa situation, particularly for graduate students. The fact that the best of the world comes here for graduate school, or for school at all, and then is not allowed to stay, to me is a travesty. But if I'm right about China and emerging markets, and the things that are going to happen, the pain that is going to be inflicted upon those markets, I believe that the world's talent and the world's treasure is going to flow ever more to the United States. I would encourage you to read, by the way, there's a new book out called The World America Made by Kagan. It was profiled last weekend in the Weekend Wall Street Journal. And he points out, by the way, he's agnostic as to whether or not America will dominate the world going forward. But he says this, that if we do not, right now there's a very, particularly in academia, there's a very benign view that a multipolar world will be just fine. There will be no single superpower, that the Chinese will dominate perhaps in their sphere, and perhaps other spheres of influence that will be roughly equal, and that a multipolar world will still chug along on a more or less American construct. Well, Kagan says, and I certainly concur, that that is utter nonsense. This is the world that America made. If you don't believe that America is going to continue to dominate that world, economically, politically, in every other way, culturally, then I think you're in for a very, very rough investing future. One example I'd give you, getting to markets. This is a chart of the dollar versus the euro currency, which is normally quoted in euro currency terms. Just to make it a little more obvious on the chart, I flipped that, so this is quoted in dollar terms. One reason I believe that the United States is going to continue to dominate the world in every way, but including as the best investment in the world, is because of the dominance of the United States military. Historically, the default reserve currency of the world has always gone to the country with the strongest military, and to particularly the country with the strongest navy. So while the dollar has been a much maligned asset in recent years, I believe that the dollar bottomed last year. I'm very long the United States dollar right now, and I think the United States dollar has many years ahead of it. And I point to, I don't think this is coincidental, May 2nd of last year, you might remember, it was a Sunday night. I was actually writing this book. I was at at our dining room table at home, which my wife will tell you I basically hijacked for several months, papers and charts all around it, and my laptop. I was there writing, I don't remember what chapter, but I was writing this book when I started getting messages that it was a Sunday night that we'd killed Osama bin Laden. I immediately started buying the United States dollar, which turned out to be a very fortuitous trade, maybe a bit lucky, but I don't think this is luck, and I don't think this is coincidence. If you can see the X on the bottom, May 2nd, that is the day Osama bin Laden was killed. 2 days later, we put in the low for the United States dollar for the rest of the year, all the way through the present. I believe that what SEAL Team 6 did was not only restore justice and the honor of the United States, but also reminded the investing world that the reserve currency does, in fact, default to the world's strongest military. And the United States pulled off an exercise that night, which no other country on earth could even fathom. Going secretly into a sovereign country that far from home, hitting a target, removing it, and doing all of it successfully. So I believe that the trade of all trades, and there's a lot of things I like about investing in the U.S. relative value. One thing I like about the dollar, by the way, is it's a relative value trade. So even though I'm long-term very bullish to the United States, I'm not saying run out and buy S&Ps right now. In fact, quite the opposite. I think the S&P 500 is so exposed to the emerging markets that I think indexes have a lot more pain ahead. And I think the rally we've seen so far in 2012 is very vulnerable. But currencies, by definition, are always a relative value trade, one country versus another. And on a relative value basis, the United States massively outperformed last year, and I think that is the first year of many years of outperformance. So in closing, I'm going to quote Ronald Reagan, a man who's also significant to this place, to Notre Dame. In his final speech as president, he told us, quote, "Whether we seek it or not, Whether we like it or not, we Americans are the keepers of the miracles. And I think that is true economically and in every other way. Thank you for your attention, and I'll be very happy to take questions. Yes, sir. Okay.
Yeah, just follow Ryan's lead. Go to these mics. It is being recorded, so Ryan, if you want to flip the bottom. Yeah, like we practiced.
I speak loud enough. Your presentation seemed very bullish, United States. I saw a tweet the other day that you were actually long bonds. Why would you be long bonds in this situation? Is that just a short-term play, or are you going to transfer or transition into stocks? Or I mean, you would seem from this presentation that you want to get into stocks.
Right. No, great question, and I hope I'm being clear on this, but let me try to clarify. Long term, and this book is written for the very long term. I trade very tactically, and again, if you watch me on TV, I mean, sometimes I try to not day trade, but it may just be a few days that I hold positions. Particularly losers, I tend to be out of losers very quickly. Winners, I tend to hold weeks, though. I mean, my time frame is not years in general on the show. The book was written for a much longer time frame. I am saying that I'm so bullish on America, and this is important, long term, and I'm bullish on America relative value. In other words, that I think we will go down less than the rest of the world. I think the emerging market bubble, and the China bubble in particular, is so dangerous and is so big that I believe that markets in general, risk asset prices, equities primarily, I think commodities as well, but I'm mostly focused on equities, that equities are going to trade far lower, demonstrably lower from here. I do think that will set up for an eventual buy of a lifetime for those who belong in equities. Another whole chapter in my book, though, is telling you that most folks don't belong in equities, but that's a different story. We could be here all night. Hopefully you'll read it. But if you are likely or willing to invest in equities, I think there will be an opportunity to get incredibly long. Right now, present day, I'm very long treasuries, which I've been buying basically since that Osama bin Laden low in the dollar. What we have seen is that dollar inflow mostly has found its way into United States treasuries. We have seen a very strong rally to start the year in the S&P 500, to be sure. But for instance, this year, basically what we've seen in 2012 so far is the exact inverse of everything we saw in 2011. So the worst performers of 11 have been the best of 12. So for instance, emerging markets, which dramatically underperformed the United States, particularly China, in 2011, so far in this new year, they are actually outperforming dramatically. I believe that is a short bounce. I think it is ephemeral. I think it is a bounce to sell into, and that is what I am doing. I'm long treasuries. One of the main reasons I'm long treasuries is China. And by the way, I'm often asked about, well, doesn't China kind of have us by the neck, by the short hairs, the fact that they own so much of our debt? And I respond quite the opposite. And this is just one of the realities, one of the paradoxes of large-scale indebtedness. By that I mean, if I owe you $100, that's my problem. If I owe you $10 million, that is your problem. And that is the problem that China has. They have loaned us such a gargantuan amount of money that it is not the creditor who is calling the shots, it is the debtor. And in the case of China, by the way, I would say it's even worse than that, because they are so beholden to us for exports, because that is where their growth emanates. It's akin to if you were an auto supply company, let's say, in Michigan, taking all your profits you earn from your business and only buying the bonds of General Motors and Ford. That's essentially what China has done. So I think it's an incredibly dumb play. Now, I will also say they might not have had much of a choice because their cash flow is so massive that there aren't a lot of markets that have the scale to absorb other than U.S. treasuries. But anyway, I am bullish on treasuries. If I'm right about the emerging market world, I think deflationary forces are still at work. In general, I'm not a huge fan of Ben Bernanke, but I think he is dead on about this, and he's criticized constantly on my network and by Wall Street for talking about slack in the economy. I think he sees correctly what I see, which is that there is very little pricing power out there. There is in some very narrow circumstances. Certainly food and energy, there's been a ton of pricing power, and it's killing the middle class. To me, it's American central planning at its worst. But there is not pricing power in general in the economy. And part of that is because of China, because exports are slowing. I think they are going to start discounting more and more and more. I think we're going to eventually see a 10-year yield that gets close to 1%. We're already at 1.9. Just a couple weeks ago, we were above 2. That value was quickly rejected. I see a much, much higher price, lower yield ahead for Treasuries. Anyone else? Sure.
Sure, I'll go next. I can speak on that. So Steve, how would you really want to express like a short China trade? Are you looking at something that's really tied to it, like a commodity or stocks in relation to that, like copper, or what do you think is the best way right now to express that short China trade?
Yeah, no, great question. And everybody couldn't hear. How do you express a short China trade? And I've done it a lot of different ways. And I mean, I don't want to answer with just one because it changes so often. But to me, one of the purest way, what I did almost all of last year very successfully is FXI is the most liquid Chinese ETF. Now, it's not really the Shanghai index, it's the Hong Kong index, but it's as close as you can get with liquidity. What I would do is short FXI and buy an equal dollar amount of the S&P, of SPY. So I mostly play the relative value spread, literally play that. So saying that no matter which direction, the U.S. will rally more on the upside, the U.S. will go down less on the downside. So that is the primary way in which I play it. But there are a lot of ways. Commodities, I am actually short copper right now. Copper has had, copper in February, even though stocks have done incredibly well so far, this is getting very near term now, but stocks have done very well in the new year, but they've done particularly well in February. Copper is actually unchanged for the month of February, slightly down, I think, as of the close. I was in a car coming here, so I didn't see the close, but I think the copper is actually slightly lower. That to me is very significant. When copper is not tracking stocks as a risk asset, generally it does. It generally trades with stocks. That to me is China specific, and so I'm a big opponent of copper. I would also say Australia. Now the Aussie dollar has flown lately, so I haven't touched it because I've been respecting the momentum, but Australia is a country that is almost completely, it's really a barnacle on the whale of China. Australia is a country that lately does little but act as China. If China's acting as America's factory, as the West's factory, which I believe it is, and little else, well then China is acting as the quarry to that factory. And Australia, because of that, has thrived in recent years. But I think that there's a lot of bubble characteristics to Australia as well. So one way I have fought it last year, and I hope to again soon, is by shorting the Australian dollar. But in general, too, for investors who are not active, I don't suggest trying to necessarily short China, but I would avoid too much China exposure. And by that, I mean the simplest way to do that, without having to dig into it a ton, is honestly just avoid the biggest cap American stocks, because they are heavily exposed to China. So I'm talking about companies like Caterpillar, like Yum Brands. Those to me are the names that should be avoided, and I would focus much more on boring names. I love dividends and domesticity. Those are my two Ds. The kinds of names that meet those two criteria are non-glamorous names, utilities. I happen to love Southern Company and own that. I did very well on it last year. So far this year, not doing well. Again, the 2011 trends have flipped so far in 2012. I love Altria, MO. I think I mentioned Philip Morris before. I meant to say Altria, because Philip Morris is the international. So I like those kind of boring dividend names. In a world of a 1.9% 10-year note, if you can reasonably safely get anywhere near a 5% dividend yield, and I know that's not glamorous, it's not sexy, but I think it's effective and safe, and they're domestic plays, I think that's where you should be deploying your capital, not into the Caterpillars and Deeres and Yums. Yes, sir.
You talked about social media and the possibility of creating more bubbles, financial and economic bubbles, I'm assuming. Have you seen any evidence of this in the past? Have you seen any evidence at all of this happening in small segments?
Right. No, very good question, because I wouldn't say it's happened en masse yet, but we have certainly seen it, I think, in sectors. A sector that I've been fairly focused on is solar, and I've been very critical of. I think that solar stocks, for the most part, are really just votes on federal subsidies. And because the businesses, the underlying businesses, at least so far, have not proved to be profitable or even sustainable without the taxpayer financing them. Solar, though, is a space that at times gets, and I watch this very closely in terms of what kind of traffic it's getting on Twitter. I watch it now. Again, I was a very late adopter to this. I'm an old man when it comes to technology. But that would be an example of a mini bubble that I was able to successfully get short. I tried to short it a couple of weeks ago. Again, it worked very well last year, and I got stopped out. That one didn't work. But solar is starting to really get hot again. Names like First Solar, in wake of the Solyndra scandal, we're seeing a lot more attention by investors and, for that matter, by the press in general on solar. Anyone else? Yes, sir.
Yeah, I wanted to hear a little bit about what you think about some of these valuations on social media companies like Facebook, $100 billion. Do you think these are realistic? Do you think this is potentially another bubble that's coming up here?
Yeah, I don't know is the honest answer. I don't know enough about those companies. And just in general, too, I tend to be, and if you watch the show, you might notice this, I'm much better on sectors and macros than I am on specific companies. I certainly suspect it smells like a bubble to me. The one that I know the most about is Groupon. I don't know that much about Facebook, honestly. I've never used it. And I do think Facebook in some ways is unique from the rest of the group. What concerns me is that all social media in the last couple of weeks seems to have gotten a lift from the Facebook sort of halo effect. And I think that is unjustified for at least some of those names. The one that I think it's unjustified on that I have been short, I'm not right now, is Groupon. I'm quite certain that Groupon closed below $20 today, which was its IPO price. To me, Groupon is not really a technology or social media company as well as I understand it. It's an incredible sales force, and I don't doubt that they have some very entrenched terrific sales people and sales relationships, but I don't think that there's any significant barrier to entry for Groupon. And I suspect that names like Google or like Facebook are going to supplant Groupon, even though it's had a terrific valuation so far in the market. But yeah, I mean, it's a hot thing that we talk about it a lot on the show. You might notice I try to be quiet in that segment. I'm not typically quiet, but I try to be quiet on social media. It's just not my forte. So, yes, sir.
With military dominance, the recent budget cuts in the U.S. military, they're going more against land occupying ability of the military, focusing more on building up special forces. Do you think that'll have an effect on our dominance? And what do you know anything about China's military buildup and what that growth rate is like?
Sure. I do. And I don't know enough about the military to know if this strategy is going to be effective. I'm not a military guy, I'm not a strategist, so is that the right strategy or not? My hunch is it is, and even with lower expenditures, we will still be far and away the dominant force. I will note, too, that even with the cuts that are proposed to our military budget, we still spend almost as much as the rest of the world combined on our military. And it's not just the money we spend, too, though. It's also the quality aspects. We have a multi-generational tradition, which is incredibly important, right, of operating an incredibly lethal military. And one of the benefits, I mean, war is obviously terrible and lamentable, but one of the benefits of the fact that we've basically been at war for 10 years is we have a military that is incredibly precise and practiced at what it does. So I think even with budget cuts, it will still remain far and away the most lethal force. Now, as far as China's military, China's making a lot of noise about their military, and of course they have a massive military in terms of numbers of people. That, by the way, is an employment policy. It is not really a military policy, and it gets right at what I was talking about with demographics. It's one way to try to placate the masses of young men who are now having a harder time finding a job and an even harder time finding a girl because of the gender imbalances in China. So I think the Chinese have smartly decided, let's give them minimal pay and have them serve in this massive military that is very long on people, but very short on real lethality and weapons. One example of that, there was much fanfare last year that the Chinese have finally launched an aircraft carrier. But really, and at first like, oh gosh, China has an aircraft carrier. All right, that's significant. But then you think about it, there are literally people who are alive today who are 100 years old in America who flew on an aircraft carrier. We have had aircraft carriers since the 1930s. This is not new technology. It's not frightening. And even more important than that, can they really operate it, at least in a sophisticated way? Can they protect it? Can they really move it and use it the way that the United States can? I say, absolutely not. So to me, and I disagree honestly with a lot of conservatives who really try to make China into a scary military opponent. I have no doubt that China would like to harass its neighbors, but in terms of being a threat to the United States, I do not see that. And by the way, too, that's one of the benefits of commerce. The mere fact that we owe them so much money via our treasury market, that alone, I think, will keep the United States and China at peace for a heck of a long time. So thank you all for listening. If anybody would like to buy a book, I'll be out front. I would love to sign them, and I thank you so much. Please follow me on Twitter. I'm at Cortes Steve, Cortes with an S, and I appreciate your time, and I love visiting Notre Dame. Thank you.